And it's business news time with Nicholas Poynton, who's in the studio. Nicholas, I reckon your first company you're talking about is A2, is it?
Yes, we probably got a bit of a preview there in the bulletin. The company has significantly revised its full-year guidance. And this company, it's a top 10 stock. It's worth about $10 billion. But it's really been hit hard by these border closures this year because a lot of its infant formula sales are sold through the Daigou channel. And this is where Chinese students and tourists or other unofficial buyers come to New Zealand, snap up their products, take them back home and then on-sell them to people in China. But the problem is with border closures, you can imagine that avenue of revenue has really been cut off. And they did notify that this was going to be a challenge this year back in September when they lowered their forecast to between $725 and $775 million for the full year. No small amount. But the effect of this has clearly been a lot more than they first thought, because they've gone and cut their guidance by a further $100 million to $670 million. The company's CEO does expect a recovery in the second half of 2021, but it's going to be slower because of these ongoing travel restrictions. And as we mentioned, as you heard in the bulletin, earlier, on the back of this news alone, A2 has brought down the whole share market by about 200 points. That's the sort of weight that this company has on our stock exchange. Its share price fell 22%. We haven't seen a company's stock tumble like that in a long, long time. It's now down to $11. It started the day at about $14.
Isn't it remarkable? Like, you would expect people to pick up some product and take it home and sell it on or move it on. Isn't it remarkable that volume is so significant, it would have this effect?
One thing that we've heard about with this company, it's the New Zealand brand, and with our dairy products, they do carry such a premium. There's such a high demand for them. So I think that maybe goes to explain why when these people take these products back to their home countries, there's such an appetite for them. And because of the appetite, they buy so much all at once. But they've also been affected in Australia as well by their ongoing restrictions. People there who buy their products aren't also able to take them home. So yeah, really a sort of a shocking result. And clearly, investors today, when they saw this news, really didn't like what they were seeing.
Okay. All right. You reckon it's Bitcoin's time to shine? Sell it to me, Nicholas. Go.
Look, in the interest of full disclosure, I must say I do not own any Bitcoin, any crypto assets of any kind, but the crypto asset has reached an all-time high. It soared nearly 18% in the past week. A single Bitcoin will net you 32,000 New Zealand dollars. And I know people are probably thinking, are we really doing this all again with Bitcoin? People who probably keep an eye on this asset remember probably back in 2017, it went on an absolute march. It had this precipitous rise, which sort of absolutely defied belief. And then there was a major correction in 2018. Those people who probably looked and felt really smart for investing in Bitcoin started to look a little bit silly. But look, we've seen this massive rise over this year, but another correction isn't out of the equation. But it's fair to say that a number of things has changed since 2017, which makes the chances of that happening a lot less likely. First of all, globally, interest rates are well down and people are looking for better places to put their money other than a bank. So that's one thing Bitcoin has got going for it. The other thing is that people's attitude to the asset class has really changed as well. It's really gaining traction as a mature and legitimate asset. It's really been helped by the progress in the policy space in this country. I've done stories earlier this year about how IRD has released a guidance on how they plan to tax the asset. IRD has now gone out to crypto marketplaces and asked them to hand over the information for their customers so they can ensure that their customers are fulfilling their tax obligations. And while people who own the asset may not like that, it actually goes a long way to giving the asset a sense of legitimacy. And this is partly why you're seeing a lot more big institutional investors beginning to enter the market. They've seen their gains. They can't see gains like that over the past 3 months and just say no. So they've been looking to enter into the market, and that in turn, that leads more retail investors to start considering the asset. I've talked to you before about how the demographic of crypto investors has changed. It used to be the domain of young white men, but now we're seeing more women and older people start to enter into this. And look, it really has been sort of remarkable to watch. And I know people sort of laugh when I talk about this sort of thing because I am actually quite interested in it. But it is worth noting that headwinds do remain. A lot of investment analysts, they do predict that next year we're going to start seeing the monetary stimulus we've been seeing on a global scale, quantitative easing program, money printing, that sort of thing. That's going to start to ease. Many are expecting in the second half of 2021. And that in turn, like all assets, will probably start to see a bit of a wobble in asset prices, and that may affect the price of Bitcoin.
Okay, you gave us a bit of an entree into the markets. Let's have the main.
Yeah, just to recap, it's down 207 points on the back of that news about A2 milk. It's down to 12,682. Our dollar is at 71 US, 93.7 Australian, and 52.7 British pence.
Thanks, Nicholas. Nicholas Poynton with Business there.